It's a marginal impact on the market. I mean, international investors have access to U.S. securities. It does expand the market somewhat. It's cute, it's a toy, nice. We have ADRs on chain. That's what that is. It's not transformational. Transformation is where the opportunity and the excitement is.
Hey everybody, welcome to Bits and Bips, where we explore how crypto and macro collide one basis point at a time, now that my mic is working. We're here to discuss the latest stories in the worlds of crypto and macro, and just remember, nothing we say here is investment advice. Let's talk markets for a second. Bitcoin's around 65 to 64K today. Brent is down significantly. Range has been 86 to 89 after closing at 100 on June 23rd. 10 years at about 4.65. FOMC hike odds are at about 36%, and they will decide on Wednesday. Now, before we get going, a quick commercial break.
This episode is brought to you by Cape, America's privacy-first mobile carrier. Same premium service you'd expect from any other carrier, but designed so your number, your location, and your data actually stay yours. Get 33% off 6 months at cape.co/unchained. Heads up, everyone. We've now fully transitioned Bits and Bips to its new dedicated channels. So if you're not yet subscribed to the new Bits and Bips channels on X, YouTube, Spotify, Apple Podcasts, or wherever you get your podcasts, go there and subscribe now. For the next few weeks, we'll play segments of the full interviews on Unchained as a reminder, but for now, you'll only hear those short segments of Bits and Bips on Unchained, no more full episodes. You can get links to all of the dedicated channels with the full episodes at unchainedcrypto.com/bits and bips, spelled BIPS. Thanks again.
All right, as always, I'm your host, Austin Campbell, High Scholar of Zero Knowledge Group. I'm here with my usual two co-hosts, Ahluwalia, Maester of Wealth, leader of Lumina, and Chris Perkins, the golden hand of Franklin Crypto, who has heroically stayed up late into the night to join us from Asia. However, we also have a very special guest today, Lorenzo Valente, Raider of ARK Invest, Director of Research. So we're going to talk a bunch of things, but to start with, let's quickly take a beat on Clarity. There is allegedly a motion to proceed expected on Monday or Tuesday, but it's not certain that we have the votes. The live wire that we have right now is essentially that Senator Alsobrooks called the White House's offer on ethics, quote, an unserious author, and says she won't support the bill in the current form. Crypto groups are pushing for Clarity to get 60 votes. So the Democrats most seen as gettable are Alsobrooks, Gallego, Warner, Cortez Mastro, Booker, Hickenlooper, and Warnock. Some of those names will be familiar to you from Genius, along with, of course, Gillibrand. But I think one of the other problems that we're hearing about now is fragmentation on the Republican side. You may have lost Rand Paul. You may have lost Hawley. You may not have Mitch McConnell showing up for a vote at all. Excuse me. All of this means polymarket odds are now below 40%. So, Chris, I'm going to start with you. What are you hearing on this one? How are you feeling about Clarity?
Yeah, it's a numbers game at this point, as you mentioned. What's the path to 60 votes? And what we're seeing, with any bill that you saw, we saw this with Genius, things get really weird towards the end. And that's where maximum politics takes hold. And that's the era that we're in. The 38% from Polymarket's a little bit concerning because it is. And, as time goes on, we're seeing prediction markets are really starting to get pretty good at this stuff. But I'm also very encouraged by what I'm seeing across broad industry. We came out today and said that we are supportive officially of the Clarity Act. So BlackRock did it, Charles Schwab. So you're seeing a lot of buy-side members coming together and saying that this is important. You also saw people like Goldman Sachs say as well. And like for us, folks around the table have been around, traditional markets for a long time. It's very rare that you get buy-side and sell-side, sometimes together pushing in the same. So what does this mean? It really means that we're down to politics, and that is the issue. Anyway, go ahead, Austin. You have some thoughts. I'll add some more later, but there is here's my biggest concern. What happens if this law is not passed? Okay, if you are a Democrat who is against this bill at all costs, or a Republican who hates this bill, what happens, or a bank, by the way, like I said last week, I think all the banks love this bill. They get federal preemption. It's going to be great. It's going to unlock business models. But you have to think about the counterfactual. What happens if this bill does not pass? Where are we? Well, we're back where, this in this era where if the issue is ethics, where those ethical provisions where we did make some progress are not part of the law anymore. We're back to where we were. If you're a bank, you're back to the old Genius Act quote loophole. So and if you're an entrepreneur, you're less to having that. You're back to having decent certainty, frankly, because our regulators are giving it to us, but it's not enshrined. And so I feel like, through the rational lens, we're much better with a law than not a law, whoever you are, unless you're trying to make political points going into midterms. And then it really comes down to what I said at the very beginning, numbers, calculus. If you're Senator Schumer, does your platform get you to a majority, and how are the numbers looking? So we're in the maximum political era of clarity.
So I'll pile in to say, I think it's pretty clear that the finance industry, the crypto industry, and to a lesser extent, the tech industry have all made peace on this bill. And if it passed in the current format, I don't think anybody would be particularly upset by that. Right. I think the descriptions that we've heard coming from each of these groups of where their views are now are all varying forms of we can tolerate it / we support it. I agree the problem is strictly political. And I think that problem now exists on two fronts, which I think is not well understood. Front number one is the classic Republican versus Democrat in the Senate. Where are we going to get to the balance point, assuming that we're attempting to advance a bill? But front number two, that I think is a little bit less discussed and is something that changed with some of the recent primary results, is within the Democratic Party. Now I think you have the moderate Democrats and the far left also staring each other down. One of the dynamics that I'm worried about is that you will get a lot of no votes from Democrats over the ethics provision that could have been yes votes a couple of months ago, until you saw big wins for the far left in places like New York in elections. And now they're worried about these people breathing down their neck. It may be that there's no space between what Democrats are able to do to protect themselves from their flank and what the Republicans will accept, and that has, quite frankly, nothing to do with clarity itself at this point. Lorenzo, what do you think? I see you nodding along.
Yeah, I guess I think you guys have summed it up pretty well. I was looking at the thread from Alex from Galaxy, which was pretty good, honestly, on each provision. Which one was kind of accepted, extended. I think the bottom line is, like, it seems like it's there's some stuff on illicit finance, like conflict of interest, like consumer protection, but it seems like really it's the DOJ only enforcement right at this point. And I think it seems like, Austin, from what you said, to get to 60 vote, you need like 7 or 8 Dems at this point.
More because you've lost some Republicans. You probably need
Right.
them.
Right. So I think it's pretty unlikely, honestly. It seems like the ethics provision is kind of the most important point here.
If only somebody on this show had been saying ethics would kill this bill for months now. All right. Well, before I cause more trouble.
Not dead yet. Not dead yet.
It's not dead yet. There's some real Monty Python vibes going on here as it gets thrown on the cart. Okay.
I mean, when is the recess? Like, it's in like 2 weeks, a week? Like, it at this point, like, it's
time is not our ally. Time
right.
is not our ally.
Right.
I think the way you said it, right, is correct. Is that it's about politics, and politicians are the issue,
Yes.
and the political incentives aren't there on either side. It's better to look like you took a shot, you tried to help the industry, fail to go raise money, because you have a lot of single issue voters in this category around digital assets that are willing to pay for a political outcome in the form of campaign contributions.
Yes.
So that's what's happening here. This is not going to pass. They're going to say we gave it a good shot. It's like that terrible video of the woman from Brazil who went bungee jumping, and you had her friends taking a video shot from nearby, and they wake up like, oh, what happened? Well, you were there, So the politicians are going to win because they're going to extract more rent concessions from the constituency.
All right.
Just three no's and one still yes. Is that where we are? I'm holding out hope, fellas. Look, if we go to a vote, then people are going to have to be on the record. I think we're going to go to a vote. And when they go to that record, they're going to start running their algorithms and saying, how's this going to affect my midterm? How's Fairshake going to weigh in on this? And so I just don't think that these numbers, these algorithms are very volatile in their outputs as well. And so I think you can't, 38% is not 0%. So I still think it's alive. But 3v1, we'll see how it plays out.
Donald Trump won a presidential election with much lower odds in 2016, right, Chris?
Yeah, but that was when we were relying on polls, not prediction markets, which makes me a little bit more nervous. And look, if we miss August, does it get overwhelmed by midterms? Yeah, but does that mean that it's dead forever and ever? Probably not. But it's going to take a while.
All right. Speaking of things that have been going on for a while, AI. Let's start with a bunch of different facts that are now rolling down the hill about AI CapEx and the open weight debate. So one, Alphabet had a very good quarter. Stock fell anyways. Their quarterly CapEx had hit 44.9 billion, pushing free cash flow negative to 5.9 billion, the first negative in their 22 years as a public company. It bought back 0 shares for a second straight quarter, a point, Ram, you have been on about for a while, so we can come back to that one. Full year CapEx guidance was raised to about 200 billion and the stock fell 7% on the day of announcement. So couple of points here. Chamath has said, do you know what Google's 25-year average return on invested capital has been since going public? 32%. When you're a machine that compounds money at 30% or 32% over a 20-year average, you give these guys the benefit of the doubt. The best thing that can happen to them is 500 different models proliferate, and then they support all of them because they will make so much money at the silicon layer. They'll make so much money as the cloud provider. Jason Calcanis piled in, fragmentation is good for them. So here's the bear case going the other way. Mark Cuban said, exact quote, there's going to be a lot of data centers that are going to be turned into pickleball courts. They're spending all of their cash flow on CapEx, and then they're borrowing on top of that. That's planning for perfection. On the precedent, he said, fiber went from 1 gig to 10 gig to 100 gig, and then there wasn't a bandwidth problem anymore. And Burry has been saying around and around we go. NVIDIA guarantees 200 billion of chat GPT spending on NVIDIA chips. So the sharpest framing of this question kind of splits some of these things apart. So Jay Yoon said, Google's CapEx is in 2 buckets: internal compute for Google, where the returns are weak, and external compute sold through Google Cloud to Anthropic and OpenAI, where it's supply constrained and priced well. And this ultimately has been seen elsewhere in the market. Miners are selling power into this. We've seen a lot of the crypto companies starting to sell into the data space. A good example of that is you have Hut leasing a campus, IREM doing cloud services contracts. TeraWulf has a 20-year Anthropic lease at roughly 19 billion. You're seeing people pile in on this. So before we get to the open weights component, since I've said a lot, I want to take a deep breath and let's start, Ram. I know you've been talking about some of these points. Let's start with you and then go to Lorenzo if we would like to unpack this. What do you think is going on here?
Yeah, great framing. So I find myself in agreement with Chamath, so I have to kind of pinch myself and double check my premises. That way he's correct. So the question is this: is the CapEx productive or not? Are you getting a return on capital? Is there a return on invested capital? So Google's generated 24% year-over-year revenue growth. So the revenue has gone up in lockstep with the investment in CapEx. When you look at the CapEx, you've got to break it down by vintage. Google's revenue went up this year because of their CapEx investment last year. And what I'm sharing the chart now here is a chart of Google stock price on the top, and below is the PE ratio trailing. Now, The bull case is you've got a high quality asset that's trading below the 200-day moving average. And whenever that's happened, it's been a good time to buy. And the valuation on the PE ratio is also attractive right now. The bears are saying, hey, that earnings is artificially high because you're amortizing or spreading out the capex over many years. The in-year costs are higher. That's true, but they're showing the wins on the revenue side. That's the relevant consideration. There are cash inflows that are real, that are there, that are growing double digit. And then you just take another step back and say, what about the trend? The trend is intact. AI adoption is real. We see it in double digit growth at Google. Microsoft will report soon. Amazon. These businesses are sporting 40 to 50, 60% growth. Google's earnings grew 80% year over year, by the way. It's just outstanding. They have strong capital allocation. The president of Google is a former Morgan Stanley investment banker. They're very capital allocation disciplined. So I actually bought this name after reported and it was down 7.3%. I think we're within 20 minutes of nailing the bottom. I posted on X2, went to an overweight. We were market weight before. But I think this is a great high quality asset. They're also uniquely positioned because they have lower costs. They don't have to spend as many on NVIDIA chips. They can internally consume any excess compute. And if they, and they also have an installed base of customers. Google 1 year from now may well be the largest cloud business on the planet, which says something because they were a number 3. They were the mutt in the litter. They were a trailer. Now they've positioned to leapfrog ahead of their competitors. So we think it's interesting. The AI adoption story is real. It's a good trend. I think the fears around CapEx are overblown for Google.
So Lorenzo, you may know a little bit about investing, just, as a setup for our audience here. If I were to lob the ball to you and ask, what are you making of the current landscape in AI? What are you thinking about this right now?
Yeah, so I think I agree with the Bram. So look, like when you look at the cash flow chart per quarter of Google, and you obviously see the first quarter in history, I think some investors are obviously sweating, right? Like this was the safest thing in the world, cash flow generative machine, and so obviously, it raises some eyebrows. Look, as you said it, right? Like I think there's a couple of different concerns. Like most of that, some of that goes to pre-training Gemini and inference on Gemini, which is like their own model. And I think part of the concern there is, it's not frontier, right? If you compare it to like OpenAI and Anthropic, and it's not competitive with the open weight models either, the cheap models that we're probably going to talk after. So that's number one. I think on the pre-training and inference side, the AI cloud business, as Ram said, like for Anthropic and OpenAI, look, there's like 1.5 trillion of compute backlog, I think, in the next few years. So I get the analogy with dark fiber, with like there is like real demand there, right? Like there's real demand. I think you've seen OpenAI and Anthropic submit the confidential S1. So it's been a while since we hadn't had like an update on their revenue, and I think it's part of why these topics are coming up, and also everybody's making a fuss of like Kimi 3 model and open weight. But it's like I assume like we're gonna get an update at some point, and like both of them combined are gonna go towards like probably 100 billion ARR, most likely in the coming months, right? Like, and Anthropic was at 45 billion, and OpenAI I think near 35 billion ish, and I think we're gonna see more revenue. So yeah, look, like it's an investment cycle. We think the return on invested capital here is going to be fabulous, and so we're not concerned, obviously. So that's kind of the ARK house view, I would say.
Yeah, it's. I think Google has to double down when you're in the tech industry. There's always barbarians at the gate. People are always disrupting you, and so I think across the board, they're like not not my house. We're going to double down. We're going to go on offense. We're going to win this space. And I think to Lorenzo's point, I think like Gemini's doesn't seem to be as competitive, but I think it will be ubiquitous and it'll be integrated to their entire suite. And we're using Gemini all the time, and many of us don't even know it at this point, I imagine. But I know we're going to talk a little bit about the open weight versus closed weight debate here, and like what we seem to be in like this max like bat protocol thesis now in AI, or everything's attributing to to the foundation, and eventually the apps will take charge. But open versus closed weight is really where crypto comes in. I've been thinking a lot about this lately, and if you look what AI is doing, it's really disrupted Web 2. It's really disrupted, and I'd say even Google. We're showing this with Google right now as they're having to double down and change their capex and everything else. We had SaaS apocalypse, right? And the one thing that the light bulb hasn't gone on yet, and this really plays into the open versus closed debate. And you saw, the all-in guys, bantering about crypto versus AI, AI versus crypto. I've got news for everybody. AI and crypto go hand in hand. If there's one technology that will be powered by AI, it's crypto. And I think the ethos of open weights is starting to play in. We published a piece, Sandy Call, my colleague, published a piece this week around the rise of the agentic economy and how it's really happening. Whereas SaaS was disrupted by AI, crypto is going to be empowered by AI once we get through some of these security issues, which are getting solved. That's where my head's starting to go, and I just think it's under discussed. But I know we want to talk about open versus closed, and I think all of us I don't know. I think at least one of us, two of us on the call, are going to agree that open weight is the way to go, as apparently does Jensen Huang.
Well, let's get right into the Jensen thing then. So he posted, I think, his first ever post on X.
Yep.
For my first post, I'm sharing a letter NVIDIA signed on why open models matter. I'm going to summarize this using his own words, like clipping out the most important part here, which is open models strengthen safety and cybersecurity, accelerate innovation and diffusion, and enable sovereignty. The world needs both frontier closed models and frontier open models. So the letter that was signed had 25 signatories at the start, many major names on there, including NVIDIA, Microsoft, Meta, IBM, Hugging Face, Mistral, A16Z, Y Combinator, and Palantir. Big ones missing: OpenAI, Anthropic, Alphabet, and Amazon at the start, but OpenAI and Alphabet have signed. Anthropic and Amazon are the holdouts. 2 days prior to that letter, Axios had reported OpenAI and Anthropic were lobbying the White House to curb them. So let's talk about commentary online. I have reshared a thing my friend Nick Carter, former podcast guest, has said is the point is simple. The US government does not owe either of the large labs a business model. If the economics of selling tokens doesn't work due to distillation, cheap clones, or Chinese AI magic, essentially, so be it. Later this week, he said if their business models get exposed, better that they fail now when it's VCs and LP capital at risk and not the general public. Likewise, this fight, honestly, some pretty juicy drama. Julian Schrittweiser, technical staff at Anthropic, had replied sarcastically to Jensen, "I'm so excited that Jensen is a believer in open source now. Looking forward to the CUDA and GPU driver open source release." Andrew Ng in the same thread, "This is false equivalence. Everybody has the right to keep their code private. The problem is when someone tries to stop others from open sourcing." And David Sachs, White House AI advisor, said the entire tech industry, save for Anthropic, has come out in favor of open source AI. They won't stop until they kneecap open source. So the safety case was made by an Anthropic researcher saying essentially that's just not true on the letter's claim that the community catches vulnerabilities. If OpenAI's model that hacked Hugging Face had been open weight, quote, anyone with a few chips could run it safeguard free. The way I would ultimately put this, I think, is from Joe Weisenthal of Bloomberg. All these CEOs are investing heavily in closed source AI. how is this just not textbook virtue signaling that would immediately be called as such in any other context? So open weights, closed weights, and I specifically, Chris, want to start with you because I want to start not with an economic question, but with a structural question. If we live in a world where we accept that Chinese open weight models will continue to be a thing globally, regardless of what we do in the United States, what does it say about what our approach needs to be in the United States on this?
I think that obviously we're big believers in open source. We think that having looked at the Chinese models, they're not a panacea. Where's your data going? Who's using your data? How, and yes, maybe you can in-house them, but these things are not, necessarily enterprise ready. They're cheap. They have some benefits. I'm hoping that competition is a wonderful thing. Competition is a wonderful thing in markets. It will accelerate development in a positive manner. One thing that I think is really interesting about what you just talked about is the fact that we're now starting to see the major AI companies really finally ramp up their advocacy work in DC. We haven't seen that previous. They were late to the game, and my understanding is that the capital that they're pushing into that space right now is on par with the crypto industry, or is quickly approaching it. And so I think they're going to take a lesson from the crypto industry. Look, that said, we're at the beginning of the story, not the middle or the end. Technology has surpassed policy, and it's moving at a pace that is very, very difficult for many of us to fathom. In the end, what do we want? We want principles-based approach. We want transparency, predictability. We want to be, we don't want our civilizations to end, obviously. But look, in the end, I'm a big believer in open weights, and I hope that they win.
Lorenzo, how are you looking at the open weight thing? I think you're a strong believer in the overall space. How does this impact your view?
Yeah, I think I have like maybe a more balanced take, and also like a take from the investment side of things, right? So like first of all, as Chris said, like these open weight models are not the panacea. Like if you look at Kimi K3 in particular, right? Um it's like half the price of Fable or Opus 5, right? But like it uses more than twice the tokens. So if you look at it like from a per task perspective, like went from like which is the most performant, now which is the most performant per number of tokens, and now like per task, which is like per unit of cost, right? And so if you look at that, like you pay pretty much as same price, and you don't get frontier performance. So it's not like Kimi K3 in particular, it's not like 10x cheaper than Opus and Fable, number one. Number two is, look, I think from the investment side, and we're invested in both in OpenAI and Anthropic, right? If you look at I looked at this like earlier this morning, right? So DeepSeek is raising right now. It seems like they're raising at more than 70 billion of valuation. They're, I think, over like 600 million of run rate kind of revenue. And Moonshot AI, which is the lab like that created Kimi K3, I've seen some stuff like at 25, 30 billion, right? So like those are, and Chris, I mean, those are huge venture outcomes, right? Like, I mean, forget about OpenAI and Anthropic, which are like have accustomed us like to over $1 trillion, but like if you take out like OpenAI and Anthropic, like Cursor was bought like at 60 billion, and XAI was basically rolled up into SpaceX, but it was kind of an internal thing. So it's like those are one of the biggest outcomes in AI. Why don't we have competitors in the US? Like, we have the best AI researchers. Why can we compete like at the open weight front? And I think the dirty little secret is most of these models are probably distilling a large portion like to be trained from like US, and probably like China is subsidizing a lot of the first party API like inference or even pre-training, right? And so like the reality is like we have no idea what the cost structure of these models is. And if it were like, obviously like distilling is forbidden in the US, which I think is the main reason why we don't see $50 billion DeepSeeks walking around like in the US. I think we have the infrastructure, We obviously have the talent. And so like, look, that is kind of the only point. I think the other thing is just like data breach concerns, right? It's like, look, if you look at Open Router, I think like 60 or 50% of the token volume comes from Chinese created models, but like most of that is hosted like in US inference, right? It's not hosted like in China. And granted, like you can run this on-prem, and this is not something you can run on your laptop, to be fair. Like you need a data center, but like some kind of like closed like on-prem, there's still concerns, I think, about data breach, right? And this is not like this is not new. You know, I looked into this like for cellular networks. Like I remind people like Huawei is forbidden like in Europe to build like cellular towers, and I think it's the same in the US, right? And it's like, why is that? I think there's just not enough evidence that, you know, there are no data breach or security concerns, honestly. And so I think, as you know, as long as if we have like a regulator that comes in and say, hey, like this model, you run it on-prem, you're 100% sure you're not going to have like a data leak or a data breach, I think that is fine. Otherwise, honestly, I think for a lot of enterprises, it's just going to be tough to use some of these open weight models.
There will be room for closed weights as well. And so totally different strokes for different folks. And, you know, it's not dissimilar to crypto, where some people will want an intermediary. Like
Right.
intermediaries are never going to go away. Like there's a lot of value that intermediaries provide. I think but at the same time, there should be open weightings as well that complement and let the market choose.
Yeah, the industry, what's good for the public are open weights, right? The world needs more low-cost, abundant intelligence, low-cost, abundant energy, low-cost, abundant robots and care and labor. So that's what open weights delivers. If you are Anthropic or you're OpenAI, or you've got a proprietary model, then you live in a closed weight world and you want to extract rents from that proprietary IP. That's their natural incentive. And they're entitled to do so under capitalism. Now, capitalism has distillation as a part of our core feature, right? The Wright brothers created the airplane in 1905. A decade later, new companies, high growth companies like Boeing and Lockheed Martin were formed, distilled the Wright brothers IP, and created these new planes and form factors. The Wright brothers did not benefit from that. That's just called competition and capitalism. So let the market play out. Let's see how it evolves. I hope that we do see successful open models. I also hope that the closed model framework can win too, because they can then raise capital and fund more R&D. So let the market do what it does best.
Well, on that note, then, let's take a quick breath there. We'll go to our second ad break, and then we'll be right back.
If you hold crypto on your phone, your biggest vulnerability isn't your wallet, it's your carrier. AT&T, Verizon, and T-Mobile have been breached again and again, and SIM swaps are still one of the easiest ways for attackers to drain accounts. That's where Cape comes in, America's privacy-first mobile carrier. Same premium service, but Cape rotates the identifier on your SIM every 24 hours, deletes your call and text metadata after a day, and protects against SIM swaps with a 24-word recovery phrase that only you control. You also get 2 middle-to-end encrypted secondary numbers for banking and signups, so you stop handing your real number to every app that asks. Go to cape.co/unchained and use code UNCHAINED for 33% off your first 6 months. Heads up, everyone, we've now fully transitioned Bits and Bips to its new dedicated channels. So if you're not yet subscribed to the new Bits and Bips channels on X, YouTube, Spotify, Apple Podcasts, or wherever you get your podcasts, go there and subscribe now. For the next few weeks, we'll play segments of the full interviews on Unchained as a reminder, but for now, you'll only hear those short segments of Bits and Bips on Unchained, no more full episodes. You can get links to all of the dedicated channels with the full episodes at unchainedcrypto.com/bits and bips, spelled BIPS. Thanks again.
Hey, everyone, we're back. All right. So for our next topic, we do want to talk a little bit of macro, especially as we have a couple of people in the investing world here. So one, couple of wars over the weekend continue to drag onwards. Ukraine stuck vessels in the Caspian Sea. Zelensky said the targets were carrying military cargo between Russia and Iran. Iran called it a commercial vessel, reporting a sailor killed. Yaroslav Trofimov, the Wall Street Journal chief foreign affairs correspondent, said the two wars have officially merged. Iran's foreign ministry said the strike cannot go unanswered, and Tehran was still threatening retaliation against Ukraine this morning. US and Iran, they both paused strikes over the weekend. The first multi-night pause in about 2 weeks, I believe, with Tehran in talks with Oman over Hormuz traffic. Again, Brent had already fallen significantly as a result of this news into today. The 10-year hit on the 23rd, 4.7%, its highest since Jan 2025, still hovering in the 4.6 range the last I checked. The Fed is also on Wednesday following all of this news. Odds of a hike are allegedly at 36%, but at no point over the last month or two have those odds reached 50%. But again, this is fairly odd to see such uncertainty so close to a meeting, is the quote from Jim Bianco. He also said, since the financial crisis ended in 2009, the Fed has held 135 FOMC meetings. Only 4 had enough uncertainty for the probability to be between 33 and 66% in the days leading up to the meeting. Bianco's read on why this is about the end of forward guidance. Bitcoin sits around 65K. So I'm going to start here, Ram, this time with you from the investment angle, and then Lorenzo, which is, what are you making of all this action? Is this a nothing burger, or is something going on here?
You know, markets are saying that we're seeing a peak in this conflict. You know, if you look at the price of oil today and energy stocks, you know, we trimmed some energy names today also. I don't think this is much of an issue to worry about. Markets have had a lot of time to price this in. Oil is still well off the highs. More supplies coming online. Market actors are adapting. So I don't think it's really an issue. You know, Trump is uniquely focused on the midterms. He is concerned about the House going towards the Dems, in which case he will be a lame duck president. He will not be able to advance his agenda, and he will be under tremendous scrutiny. So his focus is on getting gas prices down and getting out of this conflict as quickly as possible. He's going to do that by jawboning hawkish rhetoric and then walk it back 2 or 3 days later. And that's been pattern and practice. I see no reason why that would change.
Lorenzo, what's your take on the situation?
Look, honestly, I haven't been monitoring this as closely. I think for us, like, look, like the ETFs that we have, like they're very forward, like they're disruptive innovation ETFs, right? And we're very long-term investors. We have like 5-year outlooks for a lot of the companies that we hold. So, you know, to be totally honest, this doesn't change a lot for us.
That makes sense to me, but I would also say, to some extent, there's some signal in the fact that you haven't had to be following it closely, right? Because, like, let me ask you in the opposite direction. Was that your view when this war started originally between the US and Iran, or were you monitoring it more closely then?
No, same. It was the same. Yeah.
All right. So long-term thesis, unchanged, short-term noise.
Yeah, and I think we had a house view that things were going to get resolved pretty quickly, which obviously, you know, hasn't panned out. But yeah.
You know what? I'm actually going to say something that I think might surprise people. I do think that's kind of what happened. And what I mean by that is, while there has obviously not been a formal cessation of hostilities and both sides have been trading punches occasionally, we've settled into a relatively stable equilibrium that markets seem to be able to price with only occasional disruptions. So while things are certainly not over from a geopolitical standpoint, I have not seen big market gyrations in the way we were seeing them at the open of this conflict as both sides trade punches. Chris, what do you think of that?
I think, sorry to be master of the obvious, but Ukraine and Iran have been related since day one. It's just so obvious to those of us who study it. Vladimir Putin had a lot to gain in the early days by having Europe and America distracted with Iran, and I think he was very happy to see that that kicked off. But now, to your point, this is kind of stabilizing, and not in a geopolitical sense per se, but like there's a stasis that's been reached, and so it's like not at the forefront of like all of our minds constantly, or the market uncertainty is priced in. My sense is that this is going to drag for a very long time. We'll trade bombs, and the other thing that the Iranians have going for them is time. Time is on their side. Donald Trump will be out of office in a couple of years, and so that's not a terrible amount of time. Look at how long the Ukrainian war is going on. So the good news here is that we've reached a sort of stasis, and the markets are digesting, which is wonderful. I think Ram's point is spot on. It's all about midterms. Got to find a way to, if you're Trump, you have to find a way to somehow keep the House. Definitely want to keep the Senate. Otherwise, your life's going to be hell. And so, like, in the beginning, I'm pretty excited that there's a 35% chance, according to Polymarket, of a rate hike. Why? Because I just don't see it happening, and that means that the market, I guess, isn't fully there. It's and there's enough uncertainty that hey, there could be one. I just don't think there's going to be a rate hike, particularly this cycle with this chairman, and the conditions that we're seeing. We haven't seen the worst of the worst. We haven't seen $200 oil. Don't think that's happening. I think the market's adjusted to that. So I would expect personally maybe some more tailwinds between now and midterms, to the extent the president can try to pull it off.
All right. So I want to hop then to what will probably be our final conversational topic, which is RWA taking over crypto. So there was a stat I saw that started it from some guy named Lorenzo Valente, if anybody knows him, that said, quote, "For the first time ever, Hyperliquid generated more volume from RWAs than crypto in a single week. RWAs accounted for 54% of total trading volume. The numbers, which were total decentralized exchange perpetual volume of 79 billion that week, Hyperliquid was 50, of which 26 billion was RWA trading. Lorenzo, you said Hyperliquid's RWA volume alone was larger than the combined crypto perpetual volume of every other DEX, and that since June, single stocks have overtaken indices and commodities on HIP3, and 61% of all RWA trading volume is in fact individual equities." So here's the thesis, and I'm going to throw it to you first. It said, "I'm no longer convinced RWA trading will naturally aggregate on the same venue as crypto. There will likely be category leaders within RWA, and owning BTC ETH Sol flow may become far less important than many people assume." Do you want to say more about that?
Yeah, look, I think the background on this is, I think the industry is going through like a huge transformation, the crypto industry. And I think a lot of I don't know if we'll talk about that, the shutdowns of exchanges has actually like a lot to do with this. I think there's a few things, right? Hyperliquid, just a juggernaut, right? Like they're continuing to grow, basically going toe to toe with Binance and some of the biggest exchanges out there. I think number two is, we've seen like during the Iran war, just the amount of trading volume on commodities, right? On oil. And then we saw pre-IPO stocks on Hyperliquid during like the Cerebras and SpaceX IPO. And so I think these products just like have tremendous product market fit on chain. Like they use a lot of the core, global 24/7, like, worldwide reach. And it's pretty clear that, they have a very strong product market fit, right? And I think if you ask me like 2 or 3 years back, when we were like underwriting a lot of investments and things like that, like if you weren't able to compete in terms of liquidity with like, the Binance, the centralized exchanges on Bitcoin, ETH, and Sol, which were like the majors, right? You needed to attract that to get like the traders. It was like a pretty hard case to make, right? And Hyperliquid started like that, but like within RWAs, like it's pretty clear it's very possible like a year from now, like it's going to be 75%, right? Like 75% of Hyperliquid volume is going to be like RWAs, like commodities, indices, single stocks. Like it's very possible. And so within that new market environment, it's very possible to bootstrap like very large exchanges that are more category focused, like within RWA, that cater more like to institutional or like to consumer kind of trading. And so you kind of saw that with prediction markets, right? Like prediction markets had huge product market fit, and they didn't even need to bootstrap like the early BTC, ETH, Sol kind of traders. Now they're adding that, but it's pretty clear. Like I think there's going to be a lot of winners on the RWA trading side of things. I think for the traditional exchanges, the everything exchange spaces, when you're seeing like Robinhood, Coinbase, like they're going to have to compete also like on those assets, like not only like Bitcoin, ETH, and Sol. And so yeah, that was kind of what we were thinking.
Chris,
Well,
what do you
there's a
think?
different, yeah, there's a bit of a difference. So I hear you on hype, and hats off to those guys. It's been incredible. I'd probably say that the disparity between real world assets and crypto will probably be bigger going forward. Why? Because equity is $127 trillion market cap. Crypto's 3. So you're going to obviously see more activity. I think what I love about what we're seeing is we're taking legacy products and we're using crypto technology, as Lorenzo said, to improve them. For certain products that are yielding, you can pay intraday yield rather than lose it. 24/7, global transferability, blah, blah, blah. So that's the beauty of what we're seeing. But we have some challenges. Like Hyperliquid right now is banished offshore. We really haven't seen perps take hold onshore. Single stock perps, even more complex. This is an SEC. This is going to be like an SEC security-based swap. We don't have security-based futures, to my knowledge, in the States. What I'm saying is that the technology surpassed our policy. And the good news is, and our regulation, I think Robinhood and Coinbase will be formidable. Why? Because they have the access to these markets. And when you talk to the Hyperliquid team, they're trying, and everyone else, by the way, they're trying to say, how can I enter this market, which is the biggest, grandest market? But we still have some challenges. We have the CME suit on swap versus future. Does it really matter what you call this thing? It should really come down to how it's risk managed. These should be very, very capital efficient products. So the US remains an open battleground for all of these folks. We don't have winners yet. I do think in the medium term, you'll see consolidation around a couple of winners. Generally in derivatives markets, liquidity concentrates at one place. We don't know why, it just happens. And then people take off. So, don't forget Kalshi. They have the regulated footprint as well. They've got the perps market. They're doing some really interesting things. So I'm looking forward to eating some popcorn and watching how the battles begin. But yeah, this is going to be a brutal battleground. There's a regulatory aspect. There's a commercial aspect. And then where are the institutions? The preponderance of institutions can't touch Hyperliquid yet, despite the success that they've had. They want to. Early days, exciting times.
So I'll pile in here. I want to raise an interesting point that I observed in what was being said there. And then, Ram, I actually want your take on this one. It appears that the RWA that is getting most people's attention from a trading perspective, because I know from a payments perspective, Chris, we've talked plenty about stablecoins and the underlying architecture, was single name stocks. And I'm guessing, hypothetically, Lorenzo, you correct me if I'm wrong, that's probably not US people trading the majority of these things, because trust me, we can get stock trading just fine over here. I've got 8 brokerage accounts on my damn phone. So, Ram, what does it mean for the market if we're going to get distribution of US stocks either through perpetuals or the actual tokenized versions of stocks themselves on these platforms?
It's a marginal impact on the market. I mean, international investors have access to US securities. It does expand the market somewhat. It's cute. It's a toy. Nice. We have ADRs on chain. That's what that is. It's not transformational. Transformation is where the opportunity and the excitement is. So it's not novel capital formation. It's not opening access to new forms of lending and credit to underserved populations. Those are more exciting opportunities. We've obviously talked about this in the past. If you're an entrepreneur or VC, you want to get a cup of coffee, I'll write you a business plan, tell you how to get after this. We've talked about this for quite some time. There are opportunities with RWAs. Those opportunities are not going after the most crowded parts of the market, right? What does Peter Thiel say? Tell me something that's obvious to you that others don't know. Instead, what this market does is they run after the most obvious thing, like lemmings, and then go whole hog, crowd the capital into it, and then jump over the cliff. They wonder why they're not seeing better performance. Well, this is why. By the way, some breaking news here. So speaking of just RWA, so there's always something. I'm gonna share my screen here real quick. Did you guys see this? This came out
Google.
recently.
Oh boy.
Founder Multicoin. He says, quote,
Wow.
if you're building in the Solana ecosystem, you should understand that Multicoin, which he co-founded, is working against everything you are building. Now, if you wanted an engagement bait, he did that, 130K. I don't think that's his goal, though. I don't know. This is something. What's going on here?
I mean, I'll start by saying it's pretty obvious that Kyle and the folks at Multicoin have had the kind of ugly breakup that I probably haven't had since college. Like, both sides hate each other, right? Like, they're throwing punches back and forth. They've materially diverged on thesis. He left with the affiliation with a Solana DAT. Multicoin got significantly into hype. And I think I will gently say that one feels personal, right? Like, I would suggest on an investment basis, hype appears to be winning. So I'm curious, like, Chris, you've been a VC before. What do you make of this sort of public fighting?
You know, I you hate to see it. It's the reality of many situations, but I understand why you say it hits really at its heart, because Solana was this monolithic machine. It is a monolithic machine. We're going to maximize TPS. We're going to be the decentralized Nasdaq. And generally, if you're the decentralized exchange, you win in derivatives. Hyperliquid comes along and has really challenged that underlying. But look, the Solana guys are fighting back. They've been really digging into tokenized equities. And I still have my ear to the ground saying, hey, when are they going to get some kind of derivatives product market fit? I would love to see it. And look, hype's moving in their direction as well. Prediction markets, HIP4. So like, you love to see the innovation, you love to see the competition. Unfortunate that you see that kind of public spat. Love to both Multicoin and Kyle from my side. I got no beef with any of them.
What's that copy pasta from a few years ago? It said, this is not good for the industry. This is not good for the family.
I recommend no more news like this.
No more news. This, you put that in that bucket. Like, this is the issue. This industry isn't focused. Where's the focus? You need to see winning. You need to see points on the board.
Yeah, you need to win, but like we're decentralized, right? So people are not the industry, and the industry are not the people, right?
There were always themes, even with decentralization. You had many actors trying to accomplish different things, but there were themes people were getting behind. The animal spirits and the soul of this industry is just weak and fragmented. There's a lack of just good thought leadership. That's just not there anymore. It's weak. It's fractured. People going into AI.
Who's the main character now, guys? Who's the main character now? We need a new main. Maybe Lorenzo can be the main character.
I don't know.
That's a good point.
Lorenzo.
There's no main character. That tells you you don't have that ideological sparring or some momentum behind the theme.
Yeah, but the shelf life of a main character is like less than a lieutenant in Vietnam. It's not good. So
Lorenzo, I want to throw the ball back to you with a last question here based on something that you previously said. RWAs diverging from crypto trading. All right, let's accept that hypothesis is true. Next question. Do all the RWAs end up in the same place? Or are we going to start seeing similar fragmentation to traditional industries where you'll have like stocks, bonds, commodities over here? Like, let's take the hypothesis. Where does it go?
Yeah, it's a good question. It's hard to say. Look, I think derivatives and synthetics like Hyperliquid are just faster to market Like for spot, like it's gonna take a lot of time, honestly, like more time. Like we've seen this. We're trying to tokenize some stuff, so I can really talk. We're trying to do a lot of this stuff. You need to work with the issuer, and I'm sure you guys, Securitized Superstate are working on this. There's some of the companies. Bullish acquired Equinity, which is like one of the biggest transfer agents. Like you need to play ball with the issuer, right? And it takes time. There's a lot of legacy infra like custodian, transfer agent. You need to integrate with these systems, so that's gonna take time, right? I think for derivatives, like Chris said, like most likely it's gonna aggregate like towards like one or two venues, which is what we've seen even in crypto, right? Like Binance has like pretty much like 50% of the flow, like in BTC derivatives. Within RWAs, like I'm not sure you're gonna trade everything in the same venue, right? And I think we're making investment there, like we're looking at that, and so I'm less sure about that.
But the Reg NMS comment period should be coming to an end. And for those who don't remember, it's the National Market Standard, National Best Bid and Offer, where it looks like Atkins is going to kill that. That could result potentially, if it's waived, in maybe a little more fragmentation. But like at the end of the day, consolidation of liquidity makes sense because you can afford yourself capital efficiency. You can put correlated products together for better capital efficiency. That's the natural state of affairs, particularly as institutions come into space.
All right. So on that note, we're going to call it here for today because we're at time. So that is it for us on Bits and Bips. As for all of us, we'll be back in 1 week to discuss more about how the worlds of crypto and macro are colliding. Until then, everyone. Thank you for watching, and hope you enjoyed this episode of Bits and Bips. Just remember, nothing we say here is investment advice, and please check unchainedcrypto.com/bitsandbips for more disclosures.